Jelena, we don't have the numbers yet. What do you think they're going to tell us over at LVMH?
Yeah, so I think LVMH really starts this reporting season, and the key here would be to see whether it has been able to sustain this double-digit momentum that it has been enjoying in all the prior quarters. There is a clear deceleration in the US market, so it's important to see whether it will be the same or not. And especially all eyes will be on China as well, because that's the key market that is supposed to be up for recovery post-pandemic. But with a difficult macro and also real estate weakness, there are question marks here as well about the pace of this recovery.
It looks like, I'm just checking. It looks like it might have dropped.
Oh, there we go. Yep,
yeah, we got it.
Now.
So it looks like organic revenue growth of about 14. Okay, wine and spirits organic sales were down 14%. Estimates were for down 2.7%, so much worse than anticipated. The fashion and leather organic sales was up 9%. Estimates were for up 11%, so that's also a little bit weaker. So just with those two things in fact, so wine and spirits down 14%, fashion and leather organic sales up 9%. What's your initial take on that?
Yeah, initial take, I guess it's going to be taken. I guess it's going to be a disappointment for the market because everybody's so used to the company really outperforming the estimates. So especially the wine and spirit could be some destocking issues here in the supply chain. It will be interesting to listen what the management says about that. And the fashion and leather, also it has been outperforming the industry for many quarters in a row. I think that they might still be faring a little bit better than the peers. So it's definitely a weaker sign for the sector.
Mm-hmm.
How quickly, if you were to look at the luxury sector, Jelena, clearly the market is slowing down. LVMH is reflecting that. This is clearly a miss. The ADR is coming under a little bit of pressure. That key fashion and leather organic sales number is weak by some considerable margin. If you were to look at all the luxury names, how does LVMH Hermès stack up against a Kering or a Moncler? How do you think about how you want to separate out this sector right now?
Yeah, so clearly LVMH has been one of the top performers in the recent past. Of course, we think that the brand that it has are really exceptional with especially fashion and leather, sort of wide mode businesses. Hermès as well, it has been kind of going from strength to strength and also like really special, really strong brands with legacy, etc. Moncler has more of a kind of a growth story still with store expansion, but maybe a little bit more fashion risk here. And Kering is probably in a more difficult spot given that it's going through a turnaround now with Gucci, with new designer and CEO in place. But also the shares have come under pressure over the past year and few months. So the shares start looking attractive from our perspective for long-term investors.
Just to recap here, we got the wine and spirits sales down 14%, fashion and leather organic sales up just 9%, which was a miss, and overall revenue for LVMH coming in just under 20 billion euros, which was lower than estimates. If you just take a look at, say, the ADRs here in the U.S., depository receipts, we are losing some of the ground that LVMH had. Does LVMH need a stronger China? Does it need more U.S. strength? Does it need more tourists to go to Europe?
It's a little bit of all the three that you mentioned, but bearing in mind that LVMH has been through such a tremendous growth in the past few years. So we have always viewed kind of this strong demand from developed markets, US and Europe, really unsustainable because it was driven to a large extent by post-pandemic savings. Yep. So really the expectations here were for China to pick up the slack, but it looks like it's not happening to the same extent. I think it's not really a big fundamental weakness. It's more of a normalization, but where the shares have also risen so much that the expectations of the markets were just, a little bit ahead of themselves, kind of expecting the sector to continue outperforming all estimates.
Jelena, Johann Rupert, who owns a lot of Richemont, said the other day that he thinks we're in the early stages of a unwind for this sector, that we've had excesses within the sector over the last few years, maybe since the GFC. What do you think of that? And is that going to be something that is going to weigh on this sector for a long time as maybe QE money comes out of the system, as stimulus money comes out of the system? How long could this downdraft last for?
Yeah, so it's a good question because, yeah, obviously nobody knows, but the sector has been, historically, it has been cyclical. So with the GDP downturns, it is revenue of luxury industry typically drops more. In recent past years, it really has been defying gravity and defying all expectations with strong double-digit growth. That was by far also an acceleration to what the sector has been delivering historically. So I do definitely think in the short term, there are some excesses, especially in the developed markets, like I mentioned. I think longer term, the sector is still driven by, the growing wealth globally. So primarily by still more of a growth markets like China, where I think demand should be supported by increase in high wage employment over the long term. But I do think there is downside for developed markets demand, which was unsustainably high, and of course the cyclicality there. I think the good thing also about the sector, it's really the sector that commands longer term pricing power, and the entry barriers for these brands are really very high. So I think that the top brands would really probably fare quite well over the long term, but maybe not at the same pace that they have seen in the recent past.